Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Monday market webcast. All right, so big up day on Friday. They just kind of ran it on up there. Bit of a trend day. Topped it out 39.24 quarter. Engaged the upper band, which we had talked about. One of the things that we discussed in the room that I have not talked about much lately is the notion of something that I've coined as a secondary band ride. Meaning you had an upper band ride here. It took a day off. It just jumped back up and grabbed the upper band again. I mean, it can happen with lower bands too. They're particularly powerful, at least potentially, because what this is an act of getting everybody leaning in the wrong direction and then taking them up the other way. Some of the most furious, most hated rallies in the last 10 years have been a part of secondary band rides, where you have a band ride, it takes a day off, everybody thinks it's over, all the contrarians and the weak shorts and everybody comes in, and even the more powerful shorts that say, okay, it's time to put some money to work, this, that, the other thing, and then within a day they just get nuked. And some of them, most of them, fight it, and they get dragged onward and upward. So we are above, well, we traded above at the time the last pre-FOMC price, which was 39.0175. We're back below that now. So heading into today, I will be very interested to see where we are by the close. What kind of a character is this tape going to take into a Fed week? We got FOMC Wednesday at 2:00. The vast majority of the important earnings are out of the way. You've got the 100-day exponential moving average here that capped the rally on Friday, and you would need to go ahead and put together 39.40 to 39.43 if you're going to maintain that band ride. But secondary band rides have the potential, and I hate that word, but they have the potential to be very powerful. That's not saying it's going to happen, but it's there. Because when you have one, take a day off and you go grab the band, that has to be part of at least something that you're looking at going into the day. Hourly, you can see there's your 39.24. Spent most of the night just kind of grinding underneath this 100-day. There's your pre-FOMC price. Came down a little bit on Europe, but you can see the bands tightening up again. It's been a pretty slow night. If you look at the ranges on those hourly candles, they're not much with the exception of 4 a.m. So you've got pre-FOMC price 39.0175. That's locked up with the hourly mid-band right now, also at 39.0175. Volume weighted average price 38.99. The big round number 3,900 is always important. Our proprietary moving average is down at 38.92. So for me, and this latest move up to 39.01 bounced off of 38.88. You had a little bit of a look at 84. It's been as high as 39.06. That's where they knocked it down from. So this area from 38.88 to 39.06 is going to have to figure out what it wants to do this morning. And if one side or the other is able to win that zone, they have the opportunity to, at least win the morning. And then again, we'll see how it wants to close. It's going to take a heck of an effort from the bulls to maintain this most recent attempt at a band ride. Like I said, I think it will take 39.40 to 39.43 to print the band and keep that alive. We shall see. On the downside, you got the new weekly pivot there, 38.61 quarter. Job one for the bears is close below that. If you can do that, then you get into the 50 here, 50-day exponential 38.46, and then at least you start having some kind of a discussion about getting back in towards the 9-day. This monthly pivot, today is the last day of that. There'll be a new one tomorrow. And that has been consistent support for the last 4 to 5 sessions. All right, that's all I've got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I will see everybody tomorrow.